In the last couple of years now, interest rates have risen dramatically, not just here in the UK, but around the world, and everyone has been expecting that this is going to cause a dramatic fall in house prices, which hasn't really happened, has it? I mean, sure, house prices have dropped marginally, but now they're straight back up again, despite the fact that interest rates haven't actually dropped since March 2020, when they dropped to 0.1%. They are now 52.5 times higher, which is staggering. So in this video, we're going to talk about 1, what are house prices doing right now? And 2, what will they do in the future? But before I get into it, the reason understanding all this is so important to me is because I've spent my life building a UK-wide home buying company, nationwide estate agency, and my own personal property portfolio. So not only does this give me access to information you probably don't have, but getting this right is critical to mine and my clients' success. So please like and subscribe because it helps me out, and let's get into it. Section 1, what are house prices doing right now? Well, it depends where we're talking about to start with. Yes, the headlines we see in the news is UK house prices are up 1.6% compared with a year ago. But when you break it down by region, some areas are performing incredibly well and other areas not so much. The other thing you need to consider is that this data isn't actually current. The figures you see on the news are in a way already out of date the moment they're published, because as we all know, if you agree to buy a property today, it can take months before the transaction actually completes. So all these headlines are from sales agreed, not Q1 of this year, but in reality, the back half of last year. So that is why when we want a picture of what the property market is doing right now, analysing the data from portals like Rightmove and Zoopla can actually offer us quite clear precursors as to what direction prices are going into in the future, what the house price data is going to be in the future. It gives us a more accurate reflection, and right now, pretty much everything is on the up, as you can see here. Even when you break it down by market sector, so first-time buyers, second steppers, and the top of the ladder, there is growth monthly and annually at the moment, and there are no indicators of it slowing down. Not only have house prices increased, but the number of sales agreed have too. So buyers that have agreed to purchase a property that would have not yet completed has increased 13% this year, which is staggering. Asking prices are on the rise, and although the average stock agents have on their books is starting to clearly increase, as you can see, the time it is taking for sellers to secure a sale is starting to decrease. I think when we all saw the average time to secure a buyer climb up to 78 days in December, as you can see on that graph, the concern was if that would continue increasing or not. But quite clearly, confidence is starting to return to the market in the form of a tidal wave of new buyers, even though interest rates haven't even dropped yet. But look, although all this data paints a rosy picture of house prices in the future, what will house prices do in the future? Section 2, what will house prices do in the future? Now, first thing is, if you're enjoying this video, please at the very least click the like button, because it really helps the video reach a bigger audience, which in turn helps me and keeps me motivated to keep making these for you. But look, let's talk about what has stopped house prices collapsing, because understanding the legs that hold the table up is kind of the key to understanding if they're gonna drop or keep increasing. I think there are 6 core legs to keeping this table a stand right now. 1, the vast majority of property owners don't need to sell. I know some households absolutely need to sell due to increasing mortgage costs, cost of living, but right now about 35% of households have no mortgage at all. And according to figures from the Financial Conduct Authority, last year 63.4% of new mortgages had a loan to value ratio of less than 75%. Around a third had a loan to value ratio of 75 to 90%, while 4.2% were between 90 and 95, and just 0.2% had a loan to value ratio of more than 95%. So in reality, the market would have to fall significantly before a large enough number of homeowners are forced to sell their home in a way that would drop or collapse house prices. 2, 84% of mortgages are fixed at the moment. We're all aware of the volatility of interest rates, and so more of us are opting for fixing our rates that reduces the likelihood of mortgage holders getting caught out to begin with. 3, repossessions are still very low. Last year, only 1.3% of mortgages were in arrears, and only 0.04% have been repossessed. In contrast, in the last financial crash, repossessions were 10 times this level. But the more interesting statistic of all of this to me is 4, the absolute number of mortgages in the UK has dropped. In the first quarter of 2008, there were 15 million mortgages in the UK for a population of 61.5 million people. Now the number of mortgages has fallen to fewer than 13 million mortgages, 2 million less, even though the population has increased by over 6 million, almost 10% to 67.6 million. This leads to leg 5, immigration. Most of that increase of the 6+ million people has actually come from immigration, and the important thing to bear in mind is with immigration, it is mostly made up of adults that require housing, rather than a natural increase of population that would see an increase of, to begin with, babies becoming children that would still need to live with their parents and probably take 2 decades to then require housing of their own. And finally, 6, Britain is not building enough homes. Even if the government didn't hit the £250,000 target year on year, but hit the new publicised figure of 300,000 homes a year, that would only increase housing stock by about 1%, which that alone is not going to collapse or really dent house prices. In conclusion, whether you buy or rent right now, the pent-up demand for housing caused by a tight supply, subsidised demand by all the government first-time buyer incentives, and immigration is going to keep house prices high for many years to come. Comment if you disagree, and if you're interested in property, I'll check you up here in the next video.